the hey, we are here. We're still alive. It's Monday, probably the bloodiest Monday I've seen in my lifetime. How you doing, Ceara?
I'm great. I was away all weekend touching grass, and so I came back to this horrific brief and also all the news like an hour ago. So that's what this episode's going to be, is JD's going to tell us about the news, and I'm going to stare mouth agape at all of the horrors going on, like ETH dropping 20% or Bitcoin dropping to $50,000, or I don't know, maybe we won't talk about genocide today.
I don't think we have a choice but to talk about it. We had to revamp the brief a little bit this morning. The idea originally was we were going to talk good news, fake news. Yeah. JB's making some comments I'm just laughing at here on YouTube. Anyways, it was what I was planning to talk about was how to try to navigate expectations and plans and trading structures going forward with all of this uncertainty. Well, that whole darn thing has been blown out of the water. So we're going to talk about that today. Another thing, programming note, we kind of got these cool little TVs here. There's some really fun stuff we're going to do with them. So let us know in the comments if you think it's retro and cool or if you think it's ridiculous and cheesy. Yeah, let us know.
It is supposed to be.
It is supposed to be a little cheesy, but I love Banky from Turkey. Awesome. Appreciate the support. We love Turkey for a whole host of reasons. Anyways, all right. Enough chatter from me. Let's go. Well, we might have to update that video because I think the most hated villain has maybe changed in the crypto space from FTX and SBF to maybe Jump Crypto and the Japanese yen. I don't know. Maybe we'll figure that out today.
And allowed to be a public enemy? I don't know.
Well, I don't know. I mean, I think I'm going to preface everything we're about to say by this is like something that we all maybe could have seen coming, but no one really seemingly did other than Warren Buffett and a few others. Yeah. These are the things when we're constantly going on and on and on for the last, 2.5 years that we've been doing the podcast. We're constantly going on about risk management and diversification and all of these things, the risks around leverage and so on and so forth. So hopefully we're going to talk about some of the news. We're going to talk about what's going on. I'm going to give some opinions. Ceara's going to ask some questions. But at the end of this, again, the only thing that I hope people take away is it's crazy. It's been ugly. We're going to survive. The world will continue.
I was going to say, we don't want to get too fuddy on this episode either, because yes, there's fear, uncertainty, doubt, but we're all still here, right?
Totally. And we're going to be here tomorrow. And we're going to be here the next day.
Forever.
We just keep building. So first we can talk about the obvious. Over the weekend, in particular yesterday, as Japanese markets opened, there was a massive sell-off of yen-denominated assets, risk assets. Quickly, the stock exchange in Japan had a worse one-day performance than even Black Friday, as far as I understand, which is kind of insane. Or is it Black Friday? In 87. Worst sell-off since 87. I don't even know. Anyways, a lot of leverage was wiped out. The liquidations were in the multiple billions over a 24-hour period, which is kind of crazy. And ETH went down 20% in like 10 minutes. Now,
okay, hold on. We're jumping around so much. I already have questions. What happened in Japan?
Okay. I was going to get to it. Damn it.
Okay. Rate hike?
Okay. So, yeah. So,
JD, come on.
This is almost laughable, honestly, because duh. But Japan's recent interest rate hike, which notably is 0.25%, 25 basis point hike. The reason that this is such a problem is it's the first hike from zero interest rates in 30 years. This triggered a global market shift impacting both traditional and crypto markets. The Bank of Japan's move led to an immediate $4 trillion unwind of trades. There's speculation that it's up to 20 trillion in leveraged positions surrounding this at the moment. So there could be more pain in the near future. Obviously, it caused significant asset sell-offs. Whenever there's, some of these catastrophic events that no one seems to know what the future is going to hold, large investors and institutions sell off. The development has contributed to obviously a bearish trend in the crypto market, including Bitcoin, which has not yet reached critical sell side volume levels. So there's speculation that we still might see some more selling, but we'll have to wait and see. Despite the current downturn, the long-term growth potential of cryptocurrency remains strong, of course, with future trends expected to surpass traditional investments.
Okay, so my big question for you, because you did work in TradFi before,
is
that we knew that the rate hike was coming. I saw news about the rate hike.
Yeah, we talked about it.
Ago, right?
Yeah.
I can't remember when now. It feels like a year ago, but maybe just a couple months ago. So people knew this was coming. Was this not a predicted global shift? Did this not go the way we expected it to?
So it didn't go the way that most of us normal people expected it to. I think there was a lot of expectation that the Bank of Japan was going to step in, probably put more yen in circulation because a lot of this was a yen crunch. But that didn't happen. And then you just see all it takes is the first domino. All it takes is the first large position to start to unwind, and markets move, and the contagion is bananas. Like, information age is amazing because we all know about things with near zero latency generally. But the problem is that the contagion is more than we've ever seen before. Everybody knows about it, and a lot of people start acting on it. I mean, this is, again, it's something that, like, in hindsight, of course, like, no kidding. I don't think anybody thought that a 0.25% interest rate hike in Japan was going to cause this type of catastrophe. But I'm not sure if we have any articles for this, but I mean, there's a lot of people that have done some kind of post-analysis and figured that almost every major country on earth was making bets in yen denomination with leverage because they weren't concerned about interest rate movements. Well, interest rates moved. There's some tripwires that were in place, like automatic unwinding and different things that all happened. And that vicious cycle. Same idea in crypto, right? You get Jump, who is the villain of the day at the moment, dumping almost $400 million worth of ETH, like near immediately. Obviously, that crushes all the longs. There's a lot of people that were pretty bullish. ETH ETF just came out, kind of getting near the end of summer. Everybody's thinking, hurrah, crypto is going to go. Trump is maybe going to make crypto mainstream, maybe not. RFK wants to make crypto mainstream. Kamala apparently now wants to make crypto mainstream. We're all feeling
everybody loves crypto.
But once the shorts start getting liquidated, it like completely magnifies the problem, right? It just, again, it intensifies the downward cycle. Shorts happen, or I mean, the longs are liquidated. There's a massive sell-off. The massive sell-off causes more longs to be liquidated, et cetera, et cetera, et cetera. This happens everywhere, but in crypto in particular, there is leverage here that far exceeds what you can get in the real world, which is absolutely absurd, especially on some of these centralized venues. You can get, in some cases, 100 or 500x leverage. I mean, a very small movement in price just wipes out your accounts. So anyways, do we think that this is going to be a long-term problem for crypto? At the end of the show, I'll give you my opinion on that.
I've got to say that JB on X said that he's looking for some fake good news. So I want to point out that Lagarius, a chief economist who has been in the DeFi space for a very long time, is saying that this is just stocks naturally correcting.
Yeah, someone from,
good news. There you go, JB.
Someone from Goldman was saying that today too. On any news outlet that would host them, they're saying it's just a normal correction.
Okay, that's fine.
I mean, honestly, if you're interested in technical analysis and you consider fractals and like recent trends and historical data points as relevant currently, this actually isn't very far outside the realm of normal expectation yet. So, I mean, yeah, but to most people, it doesn't feel like a normal correction. It feels like, oh crap, half of my net worth was just wiped out, not because ETH went down 20%, but because I was way over leveraged. And unfortunately, I'm always going on about this. Manage your leverage. Probably shouldn't use any unless you're quite sophisticated and know what the heck you're doing and have automation to unwind. But yeah, here's another set of evidence as to why that.
Okay, so to kind of outline how bad this got,
Yeah.
Bitcoin hit a low of $49,300. ETH dropped 22% to $2,100. CoinDesk index slid 20%, including altcoins like Solana and Near down 20 to 25%. So how was your portfolio this morning, JD? Is this a time where people should like panic sell? Are we going to see sort of like bank running versions in crypto, or is this?
Yes and no. I mean, there's no perfect answer for this, obviously. Like it's a good question. There's no perfect answer. I had a bunch of people last night saying, should I sell? Should I sell my portfolio? And I'm like, into what? Like, you're going to go into cash, which right now the US dollar is probably not the best place to go. You're going to go into
buy the BRICS CBDC, I guess.
Yeah, or the platinum coin that I keep hearing the US is going to launch. Honestly, I mean, often, at least for me, I generally have fairly long-term views on things. So I make investment decisions based on my belief that at some point I'm not a trader at all. So I just invest in things that I believe could have legs at some point in the future. So I'm not overly concerned. Most of my assets that are speculative are on our protocols that we've launched, and most of them are not liquid anyways. So I'm not doing a darn thing. Did my portfolio go down? Yeah, probably a ton, I'm sure. But it doesn't much matter at this point. There's a lot of people though that have to live off their portfolios and live off trading. And for many, this was catastrophic, unfortunately.
Well, I think maybe this is a good time to talk about some of the news that we thought was good in the last week, like the Bitcoin reserve bill.
Yeah, I'm desperate. It totally sucks, JB. How do I put that on the screen? Can we put his comment on the screen? Yeah, I mean, we're all a little bit desperate for good news. I mean, I do have somewhat of a positive outlook on this. If you kind of expand beyond the current time horizon, if you think a little bit more kind of medium to slightly longer term, I think there's a lot of positives. So we'll come to that at the end. I mean, all of these people are talking about Loomis's Bitcoin reserve bill that was proposed in the Senate, which I think is obviously potentially good for the space. Maybe not so much as like it's going to create this enormous buy pressure immediately. I'm not sure that's the case. Most likely they'll do a lot of OTC stuff and a whole bunch of other things that probably won't impact public markets the way that everybody's hoping. That being said, to me, this signals a fairly strong movement again towards positivity around blockchain and specifically crypto in the US government. They obviously see Bitcoin at the very least as a strategic asset that is going to remain viable, which is a big piece of why I'm still quite positive on this. But I'll come back to that later. I think MicroStrategy, again, that's some good news too. MicroStrategy, Saylor is saying, let's raise another 2 billion to buy more Bitcoin. I can't remember how many he has. It's like 140,000 Bitcoin or something. It's kind of insane. And, obviously he's making an epic bet that Bitcoin will survive. And I think as evidenced by the amount of people he has investing in MicroStrategy, there's a lot of people that agree. So I think there's some interesting stuff. I mean, other things that we were looking at, there's some fluctuations that are somewhat natural because of geopolitics. I wanted to talk more about that, but I think it's somewhat of a sidebar at the moment relative to the crypto and American economies. I think a lot of this uncertainty around the markets from geopolitics was somewhat priced in already. I don't think anybody expected Iran and Israel to stop fighting tomorrow. Let's just hope that it's not what Iran is hinting. If that's the case, if a nuclear weapon flies,
yeah, I wouldn't worry so much about your portfolio.
Everything that we've just said becomes irrelevant.
But okay, so last week there was a lot of good news, right? You were kind of talking about this earlier. There a lot in American politics, everybody is pro crypto, pro Bitcoin. There's Bitcoin acts that people are putting forward, that kind of thing. There's been a lot of inflow of capital into startups, even though that looks different than what we expect the DeFi summer to look like. That's still a really positive thing. Is there other good news? Do you think that we can dig out some good news, or should we really be watching this with a FUD lens on purpose?
I think it's just a level head, honestly, is kind of my thing. Don't listen to any hyperbole on either side. Just try to make sound decisions that you actually believe are correct, that are not driven by anxiety and what some idiot on X told you to do. I mean, there's a lot of smart people on X. There's also a lot of idiots pretending to be smart people. And so you have to find a way to sift through that. I think some of the good news, though, and this maybe is like, again, overshadowed by what happened, but the SEC dropped securities claims against Cardano, Solana, and Polygon.
That's a lot of weight off of everybody's shoulders, I think.
It's a big thing. I think at the very least, it's signaling that the SEC maybe has slightly read the room and realized that nobody supports their positions on this, and they better just back off a little bit. And so I think that's what's happening. Does this mean that all of these are going to remain unregulated Wild West assets forever? Absolutely not. I just don't think that they're going to be bound by such strict securities laws directly as the SEC was implying, which makes it very difficult. So that's pretty good. The BTC spot ETF saw 50 million in positive net inflows, which is like not a mind-blowing amount, but it's enough that, again, net, even with some of the fear and even with some institutions pulling out because they've made some profit now, there's net inflows, which is pretty exciting. 26 million in net ETH ETF inflows. Will be interesting to see that number as reported in a couple of weeks. I think a lot of people are probably running for the hills, especially if they're not used to this type of volatility in the market. Yeah. So there are good things. There was a pile of money raised in the last little while. I can't remember the exact number. 19 startups alone raised 107 million, which is like a lot, but I think it was something like 600 million in the last month was raised for venture in crypto, which is a pile of money. I have a lot of thoughts on it's a waste of money in many cases. A lot of things that are getting funded at exorbitant valuations with no product or a barely functioning product is a lot of hopium. And I mean, at some point, the market has to mature. We can't just keep running on hopes and dreams and rainbows and unicorns and Lambos and all that other stuff. Yeah. But there's a silver lining.
Okay, so we did have some good news. We had a horrific morning, and it sounds like a really bad weekend. But there was good news last week. And so think about just in terms of how the market's kind of going and the acceptance of crypto, especially Bitcoin. If we're going along that vein, there is still good news. You don't need to be a super downer about all of the things that happened this morning to your portfolio. You probably hodl, probably still it's okay. But also look at it through a lens of there is something developing, right? And one of the things that we've talked about more historically in terms of the crypto arms race is the balkanization of the US dollar, or how crypto come up on top, or even general inflation. And I think that as we see more,
you got to come a bit closer to your mic. I think it's cutting it.
As we see more and more geopolitical issues coming forward and impacting crypto, just like we saw with the yen today, it is important that we understand how that impacts our portfolios, but also how it impacts the dollar at home. And I think that's why you wanted to talk about the Bitcoin US national debt strategy.
Yeah, this is kind of Trump's, one of Trump's campaign promises / commitments, a hilarious photo, of course, of Trump, which I always love to see. But in an interview, I think it was at the beginning of last week, former President Donald Trump proposed using Bitcoin to address the U.S. national debt, which has surged to 35 trillion. He suggested issuing small crypto checks as a means to transform U.S. dollar inflation into a stable blockchain-based system. The proposal aligns, I think, with kind of, creating better U.S. financial stability, as the article says, and also some global dominance. I'm just not sure that it has enough legs and that anybody actually believes it, which is kind of the problem. You got to take everything that politicians say with a grain of salt. I had a whole bunch of articles lined up about
Yeah.
People on both sides of the Trump debate, and everybody assumed that when he came out pro crypto, he was just going to, everybody was going to fall in line. But I think slowly society is waking up to literally every politician ever pandering for votes during election season, and then not really doing a heck of a lot about some of these like difficult issues. Do I think that we can get rid of a $35 trillion debt by investing in Bitcoin? Possibly.
Well, so here's my question. Is this obviously is from last week. So how is this news now received in light of Bitcoin dropping to $49,300, right? Like that's a huge impact on something, whether it's the Bitcoin or the Bitcoin Reserve 2024 bill that somebody proposed, or if it's or even if it's just ideas, like, maybe those were received really well last week, but what do people really think about them this week? And just to, anti-FUD myself, what are people going to think about them next week when Bitcoin's back up?
It's a pretty bold prediction that you think Bitcoin's going back up next
Not specifically, but you know what I mean? Like as the market continues, we have these really strong reactions. That's why this show exists, right? Is we don't want you to be fuddy. We don't want you to be hypey. Read the news, have critical thought, stay true to your own conviction. But okay, you read this last week. You're excited about it. Bitcoin drops and you think, now it'll never work. What's it going to take for you to think it will work again, right?
There's a couple competing thoughts here that I have. The first one is seeing how easily impacted the market caps of both Bitcoin and Ethereum can be. I think, again, that's another reminder that we have a lot of maturity still left to pursue in the space. There's a lot of whipsawing, even with what we consider to be the two largest, most major asset. Well, not what we consider, what are the two largest, most significant assets in the space. So I think on one hand, it makes pure Bitcoin adoption as like a federal monetary policy strategy, right, maybe a little bit more tricky because you have to be able to explain how this type of volatility can be absorbed by some sort of Bitcoin reserve. If they don't plan to sell it, if it's just a long-term, long play on Bitcoin, it might be okay. The bigger problem that I think is not necessarily what happened to Bitcoin in the last, let's call it 72 hours. I think as far as this Bitcoin reserve goes, there's a lot of other problems. We're adding $1 trillion of debt every 100 days, roughly. Right now. So it is like completely unsustainable. The federal budgets are completely out of control in most major Western countries. There's a lot of people that thought for the longest time that modern monetary theory, you could print money into oblivion, the economy will increase productivity in lockstep. Maybe not happening in the short term. But if, in fact, Bitcoin starts to become a store of value and a viable global asset for institutions and governments and all of these other kind of large transactions, oil between Russia and El Salvador, obviously, they're proposing that they do that transaction in Bitcoin. If that's the case, Bitcoin going up to the hundreds of trillions in market cap is actually not that out of the realm of expectation. And if that's the case, and if we being the US government, owns, let's say, a fifth or a sixth of that, which is kind of what the plan is. Let's hold 4 million coins, which is actually probably about a quarter of total coins that should ever be in existence. 21 million obviously is a number, but there's a whole bunch lost in dead wallets, or at least that's the speculation. So anyways, is that possible? Yeah, I think it is, but it's not going to matter if we don't get spending under control, because it's going to happen slower than spending is increasing the debt. It'll be interesting. It was a lot of bark, and I've yet to see the bite. How do you actually plan to do it? Like, it was just a pretty bold statement. But again, the fact that we're even having this conversation publicly and nationally, I think is something that we should definitely see as a positive. Now, for the good news, for JB and for everybody else. And I don't know if it's good news. It's my opinion. And I try to look at things from some sort of silver lining. I've been a critic, as have many, that much of the blockchain space of late is being built for value extraction, not for long-term value creation.
Absolutely.
And I think what we're seeing here, again, is institutions that their prime focus is value extraction. And that is why it's so insanely impactful on the crypto markets when these types of downturns happen, because people, they don't care about the future as much of the products. It's all about how can I take value out. I think what we're seeing, and I'm confident that there's a lot of people building here actually trying to build things that will meaningfully impact the world. And
right.
the value accrual from those is much more long-term focused. And I'm hoping that we're going to see a nice flush of some of the speculative type venture capital firms and, investment firms and so on. And we'll see a lot more focus being placed on like actual viable technology. I think we're getting pretty close to that type of reality where, there's a lot of venture now in the space that's really starting to look at things, I think, appropriately. But although when these shocks happen, and this is again just my opinion, but when these shocks happen, everything goes down, because a lot of these people and some automated, structures, all, like I said, that's a downward spiral. It happens pretty quick. What should come out of this is, again, the reemergence of many of the core philosophies of blockchain, and transparency being one of them, anti-censorship being one of them. If you look, Fidelity, Ameritrade, like every major trading platform, Robinhood, they all coincidentally went down again today. Who knew? And so a lot of that is causing a lot of bad taste in people's mouths, in particular retail, because institutions can still trade. They're not using Robinhood, but all the retail people are holding bags. They can't sell or buy in many cases, can't do anything. And that's really a shame in a lot of ways. And I think a lot of people are going to be annoyed about it. Another thing is, this would have been a lot more predictable if there was global transparency around the real leverage and the real structure that was a bomb waiting to explode.
I feel like your degen ethos is showing, and it hasn't in a little while.
Yeah. I think it's kind of a bit of a merge of my realistic expectation that we are building things that will significantly augment finance as we know it and make things a lot safer and more predictable, I think, for the average person. But at the same time, you have to have, like, in order for change to happen, you have to have catastrophic events. Unfortunately, people have to be slapped in the face over and over and over before they say, wait a second, this isn't working. And so what I think may happen, which we haven't seen in this cycle in particular, is any meaningful inflows into transparent, predictable on-chain DeFi. We've seen very, very little of that. And I think, once the dust settles here in the next little while, assuming no other major unexpected catastrophes, it'll be volatile for the next little while. There's speculation that the Fed is going to decrease rates after an emergency meeting today. Who knows? If that's the case, markets will rip for a little while anyways. But I think over the medium term, a lot of institutions and individuals are saying, wait a second, like, this doesn't work for me. I'm not a pawn in some sort of corporate cog here, or a cog in the corporate wheel, or whatever, however the analogy goes. And so I'm hopeful that, we're starting to get to the point where we're hitting critical mass of infrastructure and meaningfully viable DeFi platforms. And now, we're somewhat ready to stress test that a little bit with some inflows. If and when Bitcoin continues to be adopted and becomes more of a mainstream asset, I think that just, again, overflows to the rest of the space and ideally DeFi. I am always cautious of meme coins. And I would say now more than ever, the scammers are out in full force because, go ahead.
I just have to say that this has been a little bit of a diatribe and is maybe the definition of the talking heads, which is why we are
talking heads.
Yeah,
it is literally talking heads coming out of a TV.
What I'm saying is this is us saying, hey, you don't need to be so FUDdy. Stick to your conviction, but stick to your ethos and make sure that you're still working and building and looking to the future, right? You don't have to be super downtrodden about exactly what happened today in the bad news.
And just take what lessons you can, build them into your strategy, going over what did I do wrong? What could I have maybe done better in the future? I'll leave with this final thought. Last night, everybody was asking me, what should I do? Like, are you freaking out? Even my wife, was asking, are you freaking out? And I was like, no, like I'm sitting here with my kids hanging out. I'm going to go to sleep and sleep like I normally do. I'm going to wake up tomorrow and go to work like I normally do, trying to build the future I believe is possible. I mean, at some point, yeah, don't get me wrong. If I could see my entire portfolio, I'd probably be throwing up somewhere at the moment. But that being said, I mean, yeah, just keep plugging away until nukes fly. Once nukes fly, all bets are off. Hopefully they don't.
Yeah. Maybe say if instead of when. Okay, this has been a little bit of a fuddy episode, but it's a bit of a fuddy day. Reach out to us if you need to chat about it, or if you're not feeling super wagmies. We're happy to hear from you. Send us DMs on X, or even just comment and we will respond. We like to hear from you. Let us know what you think about our literal talking heads setup. I personally really like it. I think it's hilarious.
I think it's cool.
People should probably like, share, subscribe, maybe.
Yeah, press the bell. Make sure you don't miss all this critical talking head information. And we will see you again very soon.
With that, JD, go
Say
find
it.
yourself.
Do it. Holy shit, we did it backwards for the first time ever. Go find yourself. Ah!
With that, I have to say, go FUD yourself.
Go find yourself.
Go FUD yourself.
Go find yourself.
Go FUD yourself. Go FUD yourself.